Hey everyone, happy Friday. I want to give you a quick 3-minute breakdown of the key takeaways from President Trump's February 24th State of the Union address and what it means for the markets, the economy, and your financial plan. So the first thing, economic policy. No major surprises. The biggest headline from the speech was actually what didn't change. The administration did not announce any significant new economic policy initiatives for 2026. That's largely because most major tax and spending changes were already passed last year in the One Big Beautiful Bill Act. And with a slimmer Republican majority in the House, the odds of new legislation this year are limited. A few additional points worth noting. The president emphasized the strength of the economy, but didn't introduce new tax proposals for individuals or corporations. Trump did reaffirm support for the Trump accounts, which are tax-advantaged savings plans for children born between 2025 and 2028. He also announced a ratepayer protection program aimed at managing rising electricity costs tied to AI data centers. But again, details are minimal, and it faces a challenging path through Congress. For investors, this means policy stability. No major fiscal surprises ahead. 2, foreign policy. Rising focus on Iran. Geopolitics continues to matter for markets, and the most notable section of his speech targeted Iran. President Trump made it clear that the U.S. red line is for Iran to permanently renounce nuclear weapons. That demand likely sets up a negotiation impasse, and with it, a higher probability of U.S. taking military action. While that risk is rising, it's important to remember that markets typically react more to actual events than to rhetoric. For now, energy markets and risk assets are taking a what we call wait and see approach. 3, what wasn't mentioned, some of the biggest surprises came from omissions in the speech. No mention of financial deregulation, despite previous support. No comments on digital currencies or digital finance, an area Trump has often talked about. No discussion of risks in private credit, structured finance, or rising consumer delinquencies. And nothing addressing the recent volatility tied to new technologies, especially AI and AI software. For investors, these omissions reinforce the view that policy will be mostly steady this year. 4, state of the economy and the market view. Despite consumer confidence recently hitting a 12-year low, the U.S. economy remains solid. Growth continues to be supported by strong business investments, especially in tech, and steady consumer spending. Job growth did slow in 2025, but unemployment remains low at 4.4%. Inflation is still above the Fed's 2% target, but is expected to ease mid-year as tariff impacts fade. Mega cap tech companies are projected to increase investment by nearly 50% in 2026, and our economists expect 2.4% GDP growth in 2026. Markets have had a slow start to the year, but fundamentals remain strong. And betting markets currently suggest Democrats may flip the House, something we'll continue to monitor. Overall, this State of the Union doesn't change our market outlook. The economy is stable, fiscal policy is steady, and while geopolitical risks bear watching, your financial plan is designed with these uncertainties in mind. If you have questions or want to review your portfolio, reach out. I'm happy to talk. The financial world can be confusing and scary at times. So tell your family members, your close friends, or even your coworkers to contact me if they have any questions or concerns that they have with their own things. Thank you guys for watching, and we'll speak soon.